speaking about the funding environment and investor sentiment, I think it goes without saying that it's quite negative at the time in cell and gene therapy. However, I think the science and the innovation and the excitement around it in our community is as strong as it's ever been. These things are all cyclical, and as soon as we can deliver on the commercial promise of some of these therapies, I think the funding will shift. So much innovation, so many different opportunities for us to drive treatment to the market. But getting these treatments approved is a half of the battle, if not less. It's getting them paid for, having our biotech companies be commercially viable and profitable. And we do have to prove that moving forward. But I think a lot of the conversations we're having here at Meeting on the Mesa around bringing down cost of goods, delivering treatment at scale, educating patients, caregivers, physicians, community hospitals will help drive that. And as long as we can show those financial results, we'll see that funding turn around and hopefully deliver more treatment to patients.
There's a lot of optimism about funding in the industry for sure, and we're starting to see the tide turn, but it is slow. Funding is still tight, and a lot of companies are also playing it pretty conservative right now with the impending election to see what's happening. We're seeing a lot of acquisitions in the industry continue, and so it's going to be interesting to see how that is affecting the investment strategy for a lot of large pharma and others who are more in acquisition mode now.
Investment is really been challenging. It takes longer and has been difficult to get access funding. Why is that? I think it's because the macro context. It's also because the expectations have probably not been managed well. And overall, biotech has suffered on the investment. I think what we can do inside of cell and gene therapy to improve the investment context is make sure that we manage the expectations.
I think the investment momentum will something that we all will need to monitor. I've spoken to a lot of investment firms and VCs that are excited about opportunities in this space and specifically focus on early stage companies. And yet, a lot of us have been in a sort of a 2-year low where it's been challenging to move the molecules or our products forward because 22 and 23 has been a very challenging years.
I believe that we face a different outlook. I wouldn't say challenge, but different outlook from a financial perspective in the industry. It's cautious, but it's still there. We still have a lot of dry powder and a lot of ambition from financial institutions and private equity to invest in this industry. What they need to have is certainty. What they need to have is assurance that things works exactly as they said on the tin. And therefore, I believe having a digital platform will enable them to get the facts exactly as they are, not a guesstimate, but the facts. And that will create a certainty both from a payer's perspective, but also from a financial, private equity, venture capital, and other financial institutions to invest further in this industry.
It's clearly challenging times. I think a lot of that has to do with external factors. So for example, we've seen that interest rates have been rising. Previously, capital used to be relatively inexpensive. Now people are having to be a bit more judicious, and the investment theses are a bit more thoughtful. However, what I've seen in my experience over the course of my career is that great technologies always find a way to get to market. They get funded. It just may take a little more time. They may need a little bit more data. But at the end of the day, the cream rises to the top.
From my investor perspective, very hopeful, very optimistic. We see a lot more activity from investors in general in life sciences, especially as the generalists are coming back into the space to open their minds to some more innovative investing as they've been on the sidelines for some time. So it's a good time to keep at those investors with your exciting science. And I say, stay the course, hang in there. There's more money on the way.
Funding, positive or negative at the moment? Well, I think positive. We're mid-raise. We've been received incredibly well. Now, some of that will depend on your business, the company, what you're bringing to the industry, of course, but we're incredibly well placed around full automation and robotics to be gaining access and to be gaining interest from the industry. So green shoots, everybody's saying, I think it is. We will see. We're on schedule with our raise, and time will tell.
Certainly, the last 2 years have been a challenging investment environment. A number of our partners have seen challenges in keeping current programs going and raising funds for next programs. And so, what we're doing is trying to help them get into the clinic faster. A lot of investors are looking for clinical data, first in human data, before they'll do another investment round. So we're doing everything we can with our partners to get them there faster and on time and on budget. And we're also, I think, starting to see some more potential partners and RFPs and potential projects coming in. So I think there is maybe a little bit of a thaw in the funding environment. But of course, you still need to have projects that run on time and on budget and get into the clinic and get into patients when they're supposed to and when they're planned to get that next round of funding.
The CAR-T has moved from oncology to autoimmunity. That's a maturity of the system. That's an expansion of the system. Investment has gone to those companies, but their price has been coming down, and there's been blips of downwards when expected safety events are discussed. Really, everything that is happening is on the positive side, but maybe people expect miracles while we are having steady development. So managing the expectations is essential so that we address the funding and are able to feed the innovation at the right pace, consistency towards new products.
So the current environment for financing remains extremely difficult, particularly for early stage biotech, and early stage cell therapy is even worse. Unfortunately, many investors have burned their wings and are trying to salvage what they have invested in, and they're probably not going to be very interested in early stage. We face that regularly. People say, you're too early, come back when you have clinical data. So the environment is clearly not favorable. The other thing that we need to fight against is some preconceived ideas that, particularly in our field of NK cells don't work. Because there were a few failures in the past few years, there's a common idea that, okay, well, it doesn't work. We actually will come and prove that it does work if it's properly engineered with fit-for-purpose construct that will make the cells delivering the best of themselves. So we are convinced that it's going to turn around, but it's still going to take a little time before the big investors come back to early stage funding.
I think it isn't a surprise to anybody that the industry has really struggled with financing over the past few years, especially post-pandemic. But I think what we're seeing here in 2024 and right now is that, one, we're seeing increased investment in the sector. It's already very close to what was spent and invested last year. So I think we're definitely on a rebound. I'm also seeing that a lot of the late stage programs are getting more investment. So I remain very optimistic about the future, not only for the late stage, but also for the early stage programs as well, trying to get into clinic.
We need to bring the reality and the fact exactly as they are for them to invest further. They still want to invest, they still believe in this industry, but they need a better footing, better setting. The only way I believe that we can do that is to have a digital fact presented exactly as they can see, and they can believe in, and they can invest further.
So in 2016, there was a huge gap in the manufacturing landscape. We were in a crisis. We had allowed the science to outstrip commercial preparation for support of these therapies. And everyone rushed in to fill that gap and build out manufacturing in an uncoordinated way. There were hundreds of millions of dollars that were invested in building facilities, in building teams, in building capabilities that resulted in our having a glut of manufacturing capacity when the pace of development did not meet where we were expecting. So my challenge to the investment community, to the developers, is to evaluate what is going on in the community scientifically, commercially, logistically, balance all of that so that we are operating in a capital efficient way, making sure that the investment dollars we have are going to address all of those needs and not excessively focused on any one category.
We have a special supportive community of investors that have been in cell and gene space that really understand what they're walking into. But we always seek additional investors, and we also look for non-dilutive funding. 2022 and 2023 has been extremely challenging. 2024 is giving us a bit of hope that we will come out of this stronger. And I really hope that 2025 will be a revival, a new renaissance era where we can focus on funding that will support multiple assets, multiple therapies that will allow us to grow and evolve and ultimately bring these therapies to people that need them the most.
We went through kind of the boom cycle of 2021, seeing record amounts, tens of billions of dollars coming into the industry all at once, which was fantastic to accelerate, innovation. And then we've been through the bust cycle of, 22, 23, and now 24. I do believe that, post the rate cut that we've just gotten, those 50 basis points by the Fed in September, we're expecting another rate cut this year. I have high hopes for 2025. I do start to see, investment coming back, investors coming into the frame again. When we start to see the specialists come back and then the generalists, then we know kind of, things are back to normal. But I'm very optimistic for 2025 for financing for the industry as a whole. For therapy developers, we've had a couple successful IPOs in the last few weeks, and hopefully that trend will continue as we run up into 2025.